Hello, American people. Today I want to start with a number. 8.5% inflation for the month of July. What was that? End of quote. Repeat line. Hello, American people. Today I want to start with a number. 0% inflation for the month of July. So this is pretty crazy because the Bureau of Labor Statistics just released their Consumer Price Index, the CPI, which is the thing that economists use to measure inflation. And last month for July, inflation was 8.5%. Now, the president then went on to do a press release where he announced that inflation is actually 0%. So because the economy is very political, some of the media took that information and said, "Job well done, Mr. President." And some of the other media was like, "Oh, you liar." So I want to get to the bottom of what's actually going on and why inflation is at 8.5% and why we were told it's 0. Because there is a reason, and that reason is directly on the BLS website. And it's this sentence right here. The gasoline index fell 7.7% in July and offset increases in the food and shelter indexes. So here's what all that means. Yes, prices are slowly coming down, but not across the board. For example, if you look at the food category, that's up 1.1%, which is the second biggest increase this entire year. Electricity is up 1.6%, and shelter has gone up this month as much as it did any other month throughout this entire year. So if all of these really important categories are becoming more expensive, how is it that inflation is 0? So here's how it's justified. If you look at the energy sector breakdown, specifically where it says gasoline all types, you'll see it's gone down in the month of July by 7.7%. And because of the weight or the importance of gasoline on the CPI itself, that's how it was able to offset all the other things going up, and that's how they were able to show a lower CPI number. But by any historic measure, 8.5% inflation is still a 40-year record high. So how, though, is inflation still at 0? It's 0 because if you look at the last CPI report, which was 9.1%, and compared to this most recent one of 8.5%, you could say that because prices didn't increase month over month, inflation's at 0%, which is technically true, but it's a little confusing. It's like saying, if I stole 10 cookies from you last month, and then this month I only stole 9 cookies, technically the rate of cookie theft went up by 0% because I didn't steal more cookies. But that's why it's upsetting people, because it's not 100% accurate. Instead, something that's more reasonable to say is that we're experiencing a reduction in inflation, not that inflation's at 0%, because prices are still going up in certain parts of the economy, but they were offset by the crazy cost of gas that went down last month. But technically, yes, inflation is 0% month over month. So that's the way to think about this. But now let's talk about how all of this inflation is going to affect investors and the markets, and then we'll talk about this new Inflation Reduction Act, which is going to be passed by Congress and signed by the president. It'll become really, really important. So with that said, let's get right into it. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay, because I have a ton of updates for you from stonks and crypto and the Inflation Reduction Act. But first, let's talk about how all these headlines are about to affect the stock market, because so far, Elon and economists were right about inflation going lower. And because the stock market's prediction was right, it ended the day in the green on Wednesday, up over 2%. And that's exactly what I said would happen in my last video, which means I'm a genius. Just kidding, I'm not, and I'm not about to take my entire stock portfolio and start betting it on risky stocks because I think I'm smart and I can predict what's gonna happen, because I can't. So instead, I'm still buying the same old dusty stock, VTI, every single day and dollar cost averaging, and this one stock allows me to own the entire US stock market, and it's my favorite stock. And that's why on Wednesday, I was up over $10,000, which feels good, and now I'm happy. Of course, tomorrow, it could lose $10,000 and I'll be sad again. All I know is that in the short term, if you try to bet the stock market with these events, it becomes a casino. And in the short term, the house always wins. But in the long term, the casino transforms into a money printing machine. And over the last 20-year rolling period, if you just held the stock and you didn't sell it, you would have ended up with more money than you started with. So now let's talk about the stock market's next prediction. But first, a quick word from today's sponsor. One of the most commonly asked questions in today's market is, how much cash should you have? And the answer to that is tree fitty. Just kidding. The real answer is to keep anywhere between 3 to 6 months worth of emergency expenses. But the more important question is, where should you keep your cash so that it's working to maximize your savings? Because if you keep $10,000, for example, at your average bank, where the national savings rate is 0.1%, that $10,000 is only going to make you $10 a year. And thankfully, there are way better places to keep your cash so that it's making you even more money. And that's why I'm so excited that Wealthfront is sponsoring this portion of the video. Wealthfront is the app for making the most out of your savings in any market conditions. And Wealthfront just increased their APY to 2% APY, which is one of the highest in the game, and it's also 20 times the national average. And that means that same $10,000 can now earn up to $200 a year just for sitting there. And I know you've probably heard of other companies offering 5 to 10% interest rates, which can sound appealing, but a lot of them are also tied to crypto or something else, and I learned firsthand that there's always a price to pay. Wealthfront's cash account is FDIC insured through their partner banks, which means you can rest assured that your money is protected. And of course, one of the main benefits of holding cash is that you have no exposure to market risk. And with Wealthfront, you can easily move your money into their award-winning robo-advisor where you can invest in the market all in one place. So before you click off the video, make sure to check your savings account, because if you're not earning 2% APY, you're losing money by not bringing your cash over to Wealthfront. So go check them out at wealthfront.com/Andre. Thank you, Wealthfront, for sponsoring this portion of the video. Now let's get back to it. All right, so here's where the stock market is at now. The market is going to go crazy sometime in September, specifically on the 13th of September, because that's when the BLS will release their next CPI or inflation report. And that's when the stock market will really be tested. And here's what I mean. If you remember, in April, the inflation report came in at 8.3%, down from its March high of 8.5%. That's when economists were like, yes, all in, right? And then inflation played the Uno reverse card, because in May, we found out that inflation was actually 8.6%, so it went back up. The point is, even though it looks like we've hit an inflection point, inflation is maybe going down, there's no guarantee that it will continue to go down come September. But the market is predicting that it will, so hopefully it's right, but that's the next big event. Then on September 21st, we'll have our favorite Papa Jerome Powell tell us how much he wants to increase the federal funds rate by, which is going to be anywhere between 0.5% to 0.75% come September 21st. Nothing's changed there. Now let's talk about this Inflation Reduction Act, because it's roughly a $700 billion-ish spending package that focuses on taxes, healthcare, the budget deficit, and of course the climate. So let me give you all the details, because it is a real thing, and it's going to pass by Congress and then be signed by the president, and it's going to affect everyone, so it's very important to pay attention to. So there's 3 things this bill will do to lower inflation. And the first is to have a huge chunk of a down payment of $300 billion to lower what's called the budget deficit. And this is just a fancy word for how much the government makes versus what it spends. The idea is to spend less than what we make, and that way we can pay all of our bills. And once we've paid our bills, we will need less of a reason to print more money to pay for said bills. And when there's less money in the system, that's how it becomes more expensive to borrow said money. And when it becomes more expensive, that lowers demand, which hopefully brings a balance to the force that is supply and demand, lowering inflation. So that's the first part. The second part of the bill to lower inflation is to spend $369 billion on encouraging renewable energy programs, because as we've seen this year, one of the biggest reasons why inflation is as high as it is because gas prices are expensive. So the idea is that if we invest in alternative and renewable energy sources, hopefully in the future, energy will become a lot cheaper. And the second part of the energy bill is to reduce carbon emissions by 40% by the year 2030. Now, the third part of the bill to reduce inflation is to spend another $288 billion on expanding the Affordable Health Care Act and to reduce healthcare premiums by allowing Medicare to directly negotiate with the pharmaceutical companies, which I didn't even know up until this point they couldn't do. And of course, the last part of the bill is to limit the out-of-pocket costs to $2,000, which is awesome. There's also little miscellaneous parts to this bill, like funding the IRS and putting a 15% minimum tax bracket on corporations, but all in all, the effect of this bill is not something that you and I will feel anytime soon in our day-to-day lives. This is something that's going to take years and years before we feel the change of it, but it is a good step in the right direction, which is why both Democrats and Republicans are voting to pass it. So that's inflation. But now let's talk about crypto, because there's been some new developments and we finally have a little bit of good news. So here's the update. Voyager Digital has recently been cleared to give $270 million worth of cash back to their accounts. So if you're someone who kept cash on the app, then go withdraw the money immediately. Personally, I had like 7 cents on the platform, so I'm excited to get that money back, but it's gonna take anywhere between 5 to 10 business days to claim the money back. Unfortunately, the cash that they're returning represents only a small portion of the assets they locked people out of. Now, if you're someone who, like me, kept a lot of your Bitcoin and Ethereum on the app, here's what happens next. Right now, Voyager's accepting bids to sell sell their company, and the last bid will come in on August 26th, but we won't know what that even looks like until their sale hearing, which would happen on the 8th of September if there is one. But for now, they're putting together what's called a Schedule of Assets and Liabilities, which is a list of all the account holdings as of July 5th, and they have until August 18th to release that info to the public. When they release that, make sure to check your email and then cross-reference the amount that you have on the app as well as what's inside this release schedule, because if the two amounts don't match, you have until the deadline of 5 p.m. Eastern, October 3rd, to submit a claim. And if for whatever reason I don't end up making a video on how to submit a claim, this is how you do it. It's super straightforward. Click on this link right here, scroll to the bottom of that page where it says Electronic Claims Filing, click on that, and then it'll ask you for a password, which you won't have. So click Request Password. It'll send you it to your email, and then you can plug it in, and the rest of the process is pretty straightforward. You do not have to submit a claim unless the two amounts don't match, but we won't know that until a little bit later. Now, you can also make an account if you want to vote against the UCC. If you're not sure what the UCC is, it's a committee of 7 Voyager customers that were already chosen at random by a trustee to represent the best interests of the customer. Now, right now, they're going through either the sale of Voyager or the restructuring process. And if for whatever reason you disagree with what they accept, you can file a claim and vote against it. Because remember, they need to get at least 2/3 of the value and more than half of the claimants to accept their plan. Now, they're on our side, but if for whatever reason you disagree, that's another reason to create an account and file a claim. For now, we don't have to do anything until Voyager releases their Schedule of Assets and Liabilities. That's all the updates I have for you, and as always, have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. Don't forget to check out Wealthfront before you leave, and in the meantime, I'll see you back here on Monday and Friday, sometimes Wednesday. Love you. See you soon. Bye-bye.